Hey everyone, Jason here with BuyFi.ca, group created by investors for investors. Today I want to talk a little bit about inflation. I know it's not a overly exciting topic and a lot of people might be trying to tune out right now, but I suggest sticking with this a little bit. I used to not be that interested in the economy and inflation, but in the last couple of years, inflation has played a big role in our financial situations. A lot of people have been hindered by inflation, and a lot of people have profited from inflation. I'm obviously not the creator of inflation. I'm not pro-inflation. I'm not anti-inflation. Inflation is what it is. Understanding it can protect you from its negative consequences and help you gain some of the advantages that it can offer. So we'll be talking a little bit about inflation today. I'll try to keep it relatively brief. This isn't an economics course. This is just a basic overview. So first of all, most of us have a decent understanding of what inflation is. It's essentially our dollar losing value over time. It's the reason why once upon a time a liter of gas was 60 cents instead of $1.60, and a house used to be $50,000, whereas now $50,000 might not even be enough for your down payment for the house. So we understand the premise of it, but we don't really fully understand the cause of it and what it actually means to us and how we can limit its negative effects on us. So if you separate value and price, you get a little bit better understanding. So the value of a liter of gas 25 years ago has the same value it has now. A liter of gas hasn't got any bigger or smaller. It's still exactly what it was 25 years ago. Even a house that is the exact same house that it was 70 years ago has no different value. It's still, say, a 3-bedroom, 2-bathroom house. That still has the same value today as it did in 1950. What's changed is the price. So that means if nothing's changed value, but the price has changed, what has changed value is our dollar. Our dollar is just not going as far as it used to. So typically inflation is somewhere around 2 or 3%. The government tends to underreport inflation and err on the side of caution, keep it low on their statistics. I'll talk a little bit about why that is in a bit. But we know that there's inflation. We know it's happened in the past, and we know it's happening now. The most concerning thing is the rate at which it's happening right now. So every year the government kind of calculates what the value of a dollar is based on the economy, based on the population, based on the gross domestic product, based on interest rates, and they will essentially print money to equate what they view inflation to be that year. So typically that's somewhere around 2% or 3%. But there's also another reason the government prints money, and that's because they need it to combat a circumstance that's kind of beyond their control. So a good example of that is war. Quite often the gross domestic product decreases quite a bit when there's a war. So they'll print more money to sustain that country during the wartime. The one that's going on right now is pretty obvious. There's a pandemic. People aren't working. People aren't making a lot of money. The gross domestic product is decreased. The government is desperate for cash. Raising taxes to get more cash isn't really an option when people aren't working. So what are they doing? They're printing money. So the Canadian government has printed approximately $400 billion since the beginning of the pandemic, which is about 3 times the amount that they typically print. So we're seeing inflation at about 3 times the rate of what's normal. So if normal's 3%, we're probably realistically somewhere around 9 or 10% right now for inflation. So what that means is your buying power of your dollar has decreased by about 10% Some economists think it's maybe as high as 20%. If you look at the cost of housing, the cost of rent, the cost of gas, insurance, groceries, all of those things, it's pretty easy to see that in the last couple of years, those things have gone up a lot more than 2 or 3%. They're somewhere around 10%, 15%, maybe even as high as 20%. So this, unfortunately, doesn't really get paid back. People think that the government's going to raise taxes to get this money back that they've printed. And they could do that, but they would have to increase our taxes so drastically that most people couldn't afford it. So inflation is therefore known as the hidden tax. It's a tax that you've paid without even knowing you've paid it by the devaluation of our dollar. So the government isn't going to be able to recoup the money they've printed. So instead, we have to live with the consequences. We have to live with the fact that our money is now worth less than it was before. And this hurts some people and actually benefits other people. So if you work a 9-to-5 job, unfortunately, inflation has negatively affected you. Your cost of living has probably increased 15% or even just 10%, but unless your wages have been increased to match that inflation, you're actually going to have a harder time paying your bills. If you have cash in the bank, unfortunately, inflation has negatively impacted you as well, because that cash has lost value. So if you had $100,000 in the bank, that $100,000 doesn't have the same buying power it did a year ago or 2 years ago. So it's lost value. The people that really win when there's major inflation are the people that own assets. And unfortunately, this is a scenario of the rich get richer and the poor get poorer. So if you own real estate, for example, it's obviously seen a pretty major increase in price in the last year or 2 years. So you've benefited drastically from this inflation because you own something that is increasing in value. So if you own liabilities like boats, RVs, cars, things like that, those things have been decreasing in value. So typically you're not making any money off of those things, so they're not helping you out. You need things that actually increase in value when there is inflation. And typically real estate is one of the best examples of things that appreciate when there's inflation. So if you're wondering why the government is reporting approximately a 2% inflation in the last year, you have to understand that a lot of their costs are based on where they calculate inflation to be. So just take, for example, Canadian Pension Plan. They pay out money every month to people, and those people are expecting an increase in their payments based on where inflation is at. So if inflation is 15%, the government needs to hand out 15% more money. If the government says inflation is 2%, then they only need to hand out 2% more money. So you can see how the government really benefits from skewing the numbers and underreporting inflation. The other aspect of that is people would probably get a little bit angry if they understood what inflation was actually doing and how it's negatively affecting them. So if you found out that your money had lost 10% of its value due to the government printing money, or that your cost of living is going to be drastically increased, and yet your wages aren't going to be increased because of the government printing money, you'd probably be a little bit fearful and you'd probably be a little bit angry. And when it comes to election time, maybe you won't elect those the current existing party for a second term or a third term. So that's why you need to always second guess the inflation numbers that the government's printing. It's in their best interest to report that as low as possible. And it will actually say right on their website that they don't actually calculate the cost of housing in inflation. So the biggest cost for the general public, either buying houses or renting houses, isn't even taken into consideration when they're calculating for inflation. So that kind of gives you an idea of how skewed those numbers are. So hopefully that's a basic understanding of inflation. I'll talk more about how inflation affects real estate and why real estate is a great hedge against inflation in a future video. But this was just kind of a brief overview of what inflation is, why it's so high right now, what it's doing to your money, and how you can hopefully protect yourself from the negative effects of inflation in the future. See you next time.